I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
And this is the askSlim Market Week. This is a look back at what happened the previous week and a look forward at what might happen in the next week. Last week, all dominated by China. I don't know how many times you're going to hear me say the word China in this show that you're seeing today, but it's going to be all over the place. They were pushing the markets around as they took two actions to devalue their currency last week, and that sent the commodity markets to the downside pretty sharply. We saw a lot of pressure on oil and other commodities. Gold, however, moved to the plus side, not sharply, but able to hold some gains, and the bond market moved up in a flight to safety, and that one also not being able to hold all of those gains. Markets have calmed down quite a bit since that early action during the week. So we're going to look at a chart here at the influences of what did move the market during the week, and then we'll take a look at our calendar of upcoming events and earnings in the next week. There's some fun stuff in the middle, a little bit of promotion, and a lot of stuff that I think that you're going to enjoy. At the end, we'll be doing our short-term view of the coming week, always popular, always fun. And starting in the next week and then moving forward, we're going to have our interviews of a lot of market pros. We'll have them hopefully every week, every other week. Next week, we have Al Sherbin lined up, so we should be real good looking at him and his new book. He and I used to do a segment together where we put together the analytic and quantitative approaches to the market, and so I'm excited about being able to have him on this show, and we'll be looking and talking about his new book and combining those approaches. So let's get into what happened here in the last week. Going to put up this chart, which is a look at, well, the whole last week's action based on 24-hour trading on an hourly chart. So here is the picture of what happened in the last week on the hourly bars, and we actually thought there'd be a rally early in the week, but then that it would likely fail and we'd make a low sometime around midweek and move up. Well, this is the second week in a row that we almost perfectly wrote the script as the market acted as we expected. That even while China, how many times are we going to mention China this whole show? A lot of times, because they've really been moving the markets. On Monday, pre-market, the market had a big gain. Here was some news right in here. You see that? China, they said that their export crashed 8.3%. Producer prices at a 5-year low, but then it began to rebound as stimulus apparently was going to come into the markets, and you could see it carried over into our market. That's the white area there. The gray area is the overnight trading, and we had that strong market all Monday. Fed Fisher said, that before raising rates, that the FOMC wanted to see more inflation data. And also said the labor market healing will bring back inflation. So kind of talking out of both sides of his mouth there. Apple bounces and lift the NASDAQ, and that helped the market move up. Well, everything changed on Tuesday. We see overnight this big downside move. China devalues its currency 1.9%, getting in the way, trying to stop that big outflow of their weak exports, and they're trying to export the deflation. Yes, when they devalue their currency, they are essentially trying to get their deflation to stop and make their goods more interesting to other people in the world. and therefore other people in the world have to be more competitive, and prices come down around the world. That's why it's an export of deflation. There is fear there of currency wars going on, and that would mean that other people would do things to have their currencies be weaker. Other central banks, leaders out there, and can't put anything past them for sure. This delays the reserve status decision. Everybody thought that the Chinese yuan was going to be another reserve currency. It probably will be, but this supposedly delays it. The dollar eased back. You would think the dollar would rally based on that. The thing is that U.S. rates probably will not go up as quickly because they don't want to get the dollar to be any stronger relative to the yuan or any other currency. So that brought the dollar down, and we expected the dollar to be falling. Gold up small. I would call that disappointing action on that news out of China. Oil cracks as OPEC production surged, and add that to the deflationary prospects out there, and you have a good reason for oil to be under pressure. The Eurozone falls, DAX down 2.7% on the day. Apple cracks again. In fact, it really started to fall hard. Steel moves to the downside, but of course, lower oil and the airlines get strong. Greenspan, remember him? The maestro who started all of this bond bubble stuff? Well, he says that he warned essentially that another bond bubble was potentially out there. Greece, well, they've been in negotiations all week, and they reached a deal with their creditors, and on Friday reached a deal within their own parliament. So it looks like that's going to go another can kicking down the road. And the big news out of the corporations: Google restructures its stock, rallies up big. We'll talk about that as one of the best of the week, and comes under its new umbrella called Alphabet. Boy, that was a lot on Tuesday. But then come Wednesday, and China does it again. They devalue again. Now that's a total of about 4% of devaluation. U.S. stocks, they move down again on Wednesday, and S&Ps were down about 24 points early on. Gold started to move up. Gold miners started to bounce, but the luxury retail gets hammered. Tiffany, Kors, Apple, they move a lot to the downside as well. China weaker means they won't sell as many goods there. China ADRs get crushed. BABA, especially on weak results. Market down a lot, but then it reverses midweek following this cycle projection that we had in there, and it actually ends up on the day 4 points for the S&P 500. That was a monster reversal. Since then, it's been a sloppy week. China says no further basis on Thursday for depreciation of the yuan, but it remains weak. Retail sales strong. Jobless claims, 4-week average, the lowest in 15 years. You got to watch my word of the week on unemployment. That comes up in just a little bit, and that is going to be some explanation of this unemployment situation. Coal's down 9%, KSS, as retail struggles on a big miss, and stocks that were beaten up pretty strongly during the week get a rebound. And those Chinese stocks tried to rebound. Good. The stock market, which opens lower, then comes back. Then we come to Friday, and not a lot here going on whatsoever. Market soft as we record this. The Eurozone, their growth up 0.3%, a bit slower than estimate. China, they come out with the totals of their rescue fund, the fund and what's available to add to the fund. That makes their sovereign wealth fund at about $800 billion that they're willing to buy stock. They talk about buying high caps in China to stabilize their stock market. Talk about manipulation of markets. Boy, that has to drive one crazy. At least it drives me crazy. There's a report that China adds to their giant gold holdings, buys another 19 tons of gold. That could be supportive to gold. Members have now seen my special out there on the big picture of the gold market. If you're not a member, make sure you become one, and you'll be able to see that with a trade setting up now. Nordstrom moves up 6%, guides up. The chart is better. It was looking a little sloppy, improved. JCPenney, this got to be the joke of the week. Stock up 8%. They lost 41 cents versus expected to lose 50 cents. They are still bleeding money out of their ears. And this stock, I think, which is now trading at $8.62, up 6.8% on the day, I still think it's a $2 stock. So that's what happened this week, a choppy week, certainly, based on everything that we saw out of China. Man, that was a lot of information there. So now what we're going to do is we're going to switch over, take a look at the calendar for the coming week. You'll be able to see here the earnings reports which are coming out. Those are far fewer than we have had, as earnings season is basically over. We'll get some retail stocks coming out, a few of the laggard tech stocks still to report, and then some significant economic events coming out also. Here is the economic calendar for the week. Please take a screenshot of this and hang it up at your computer if you want to have this available to you. So here is that calendar, and I think the thing most important to notice is that this right over here. You notice this arrow I've pointed there? That's the FOMC minutes. That's probably the big event for the week, and has the highest potential of being market moving based on all of the news that we have in here, as far as stuff that I follow and trade on a regular basis. On Tuesday before the opening, Home Depot and Walmart, those are some that I trade a lot. Friday before the opening, you get Deere also. So that's one I trade pretty consistently also. And then you can see pre-market, after the market, and the economic events for the week. So that is a look at what is coming in this next week. I hope you found all of that interesting and valuable. And we're going to be back real soon with the best of the week. Welcome back. You've been watching the askSlim.com Market Week. Please go to our website to watch the rest of this show and all of our other great videos. Any questions? Write to Slim at askSlim.com.
Well, I'm going to sit and